This is Ross Garcia, bringing you a report about the loan modifications. We are live, and I want to talk about 2018. 2018, it's a very interesting year, guys. We have Donald Trump right now. A lot of people don't like him. He's trying to help out the economy. We have Wall Street, 10-year highs. And then, we still have $22 trillion in debt. We have digital currency like Bitcoin that's up on the rise. And I believe that the economy is going to tank. Okay. A lot of people were saying, oh, well, it's going to tank 2017. It's going to tank, you know, in the beginning of 2018. I was waiting for it to happen in the summer of this year. Okay. And it didn't happen. But, JP Morgan, they came out with the report and they were talking about, that it could happen by the end of this year. We do have the Federal Reserve increasing rates by 25 basis points. So it's going to cause a panic in the market. We have realtors that are not selling as many homes compared to a few years ago. So things like that is what we need to look out for in this next economic crash. And the loan modifications are the key because it's kind of like a hot potato. Your loan's probably been sold, multiple times, and they keep selling your loan. So what can you do about it? And, that's why we're so busy. So the number to call is 773-847-2200. We do have a toll-free number for people outside of the, Chicago area. But if you have a cell phone, you can call. They might not charge you. Just call that number. We have people at the office answering the phone. But, if you want to call the toll-free number, that's fine. 844-426-7457. So you can call 773-847-2200, right? Or 844-426-7457. Either way, we will get a hold of you. We will help you out with your home. And like I said, I feel like that this crash is going to come from the digital, like the NASDAQ, like companies like Facebook, Google, Apple, right? Those are the companies that we have to look out for. Microsoft, those are the ones that we could find, a dip in the market, and that could create a domino effect. And then, it affects us on Main Street, not Wall Street. It affects us on Main Street. And then all of a sudden, we have gas prices go up, right? We have the government trying to tax us for, crazy stuff like throwing out your garbage. If you're out here in Cook County, throwing out your garbage. But look, guys, I mean, we get phone calls from people in New York, California. We just got a phone call a few days ago from someone in California that wants to modify his home. And people do not want to deal with the loan modification because of the simple fact that the call's monitored and recorded on their end. So anything you say could be used against you to determine if you qualify for a loan modification. People ask me, hey, Ross, do you still get principal reduction on homes? Do you still get help people save $80,000 on their home? Well, first of all, let's talk about how principal reduction works. Principal reduction is based on an appraisal. So when your file gets approved, they send out an appraisal, and let's just say, for example, the house is appraised at 300,000. Okay, but you owe 390,000. Why do you still owe 390, right? Well, first of all, you bought the house at an all-time high. Okay, so you bought the house at an all-time high, right? And now the market took a dip. So as the market took a dip, there probably was some foreclosures in your area, and all of a sudden now, because of those foreclosures, your house is worth 300, so you still owe 90,000. So, you have mom and pop shops like Aquin that do offer principal reduction. We work well with them. They know who we are. We work well with Cooper's Loan, which used to be Nation Star. So we have a lot of communication that we've done. We've helped thousands of people through this process of loan modification. And a little bit about me, I used to work for JP Morgan Chase. So, I know how it is to be on the other end, to try to find help on the other end. And at that time, I remember when the economy crashed, everyone was looking for a job because people were laid off. So as this next crash unfolds, you're going to find people out there with master's degrees looking for jobs because what they went to school for is basically obsolete. That job no longer exists. You got digital currency like Bitcoin, and it started off maybe a couple $100 per Bitcoin. Right now, it's about $6,500 per Bitcoin, and because of that Bitcoin, you may not no longer need any more banks because it's a digital currency. You avoid having to go to a bank. The banks close on Sundays. With Bitcoin, it's never closed. You're able to do transactions through internet, and it's blazing fast technology. And because of that technology, you're going to find the cash basically diminish, because as this next crash comes, what is the Federal Reserve going to do? The Federal Reserve is basically an entity that was formed in the last crash, the biggest crash, like one of those crashes in the 1900s. I think it was 1913. And because of that crash, they said, hey, you know what? Let's form an entity within the United States to help people in this type of crisis. So, they started printing money, and they've been printing money ever since in huge quantity. And what gives the dollar the value is our army, is our navy. And because of our army, because of our navy, because of our strength, that dollar is number one, right? The dollar is king. But this crash that they're talking about, like JP Morgan is talking about, and these economics, these people that are, looking at charts all day, because of that crash, they're going to say, hey, you know what, the dollar is it's not going to have its value. And they're going to keep printing more money. The Federal Reserve is going to keep printing more money. It's called helicopter money. They're going to unleash it to the society. We might get rebates. We might get checks in the mail for us to keep spending. And unfortunately, our country is built on spending, spending, spending. That's how they do, their taxation. They tax us, we spend money. But what happens with you? What happens with you is that, 80% of your expenses are spent on your mortgage. They don't tell you this, but that money that they received from the Federal Reserve, they got it maybe at 0.5% or maybe 1%, but your mortgage is at 7%. That's why we get phone calls throughout the US. Your mortgage is at 5%, 7%, 8%, 9%. And why is the percentage so high? Well, they blame that on your credit. They say, hey, guess what? Your credit score is really low, so we have to give you a higher rate. Sorry, unfortunately, you went to shop around at a lot of different banks and they kept pulling your credit, so your credit score went down. And even if you had good credit, if you have someone in foreclosure in your neighborhood and they lost their home for 100,000, you still owe 200. You're upside down by 100,000. So let's just say you try to sell your home. You call a realtor. I want to sell my home. The realtor tells you the house is worth 100,000. You say, well, how can I sell my home if I owe 200? The realtor's going to say, well, you have to apply for a short sale through the investment company, through that company that you have, whether it's Ocwen, Cooper's Loan, Nation Star, which ended up being Cooper's Loan, Wells Fargo, Citibank, Chase. And because of that, we have loan modifications, and we do have that option to do what's called a deed in lieu, where you actually give the house back to the bank and the bank won't charge you a penny. You could walk away, you could give the house back and call it a day. But as this situation unfolds and the economy crash, we're going to see the loan modifications go through a spike. Right now, we're still getting business, but you're going to see it go to like crazy levels where we're getting thousands of phone calls a day for people that need help. That's why it's important to call now, because when this crash comes, we're going to be busier. I find myself training people all day. Luckily we have the internet, so I'm able, before I go to the office, I'm able to jump on in my living room to bring you this report to let you know that if things are difficult right now, they might be difficult in the future. And I'm talking about the near future. Maybe it could happen this month, maybe in 2 months. And talking about recessions, we're going on our 10-year anniversary of the last recession, okay, from 2008, 2009. And it started somewhere around this time, September, October. It started in Iceland. And then all of a sudden, Morgan Stanley and Bear Stearns went under, and then the Federal Reserve had to step in to rescue these people. The Federal Reserve had to pump trillions of dollars to give to these companies. And now you have companies like this company. It's a German bank, and they laid off like 17,000 people. And this bank is too big to fail, but also too big to save. And it's the biggest German bank out there in Europe. And because of that, we see this situation, and Deutsche Bank is actually the bank. So Deutsche Bank is in trouble. And if they fall, then the whole world's going to come down with it. And you're going to see JP Morgan out there, Citibank, Wells Fargo saying, hey, please rescue me. I need more money, and they don't lend it to us. They lend it to the banks, and then the banks lend it to us. Why do we have banks anyway? We're living in a digital age. You could see me right now, and we're so easily able to communicate throughout the world. And that's why I said that this crash that's coming, in my opinion, right? And this is my opinion, but in my opinion, I feel like it's going to come out of the digital space, and they're going to put it right back into the digital space. So in other words, they're going to say, hey, guess what? Some of these banks are going under, but now we have Netflix or Facebook stock crumbling, or Apple stock crumbling. And then all of a sudden they're going to say, hey, guess what? These bankers, these politicians, they're like lawyers. They just come out and then they say, okay, guess what? We have a solution. We're going to, introduce a new currency, because the currency that they have right now, it's not based on anything. It's not backed by gold or silver. They just keep printing it. It's only backed by our Army, our Navy. That's it. That's the only reason that it has its power. But as it loses its power, you're going to see prices of milk, orange juice, gas prices, that's going to skyrocket. And that's why loan modifications is the key, because as those prices skyrocket, home property values plummet. You're going to be introduced to lower interest rates. And then they're going to say, hey, guess what? If you thought a 3% was good on your home, how about a negative 3%, which sounds ridiculous, but it could happen. Or a negative 1% interest rate, or, no interest rate, where you could just pay your home, just give us the money back. That's all we want. Because right now we're in a situation where they're just kicking the can down the road, and you can't just keep kicking the can down the road. And like I said, Wall Street is Wall Street. Main Street is Main Street. Wall Street is saying, hey, guess what? All our employees are doing great. We're making thousands and millions and billions of dollars. But that's like a little area in New York. What about all of us? What about people that had to work for a living? What about people that work construction, police officers, firefighters? What about us, Main Street? Well, hey, sorry, it is what it is. It's not our fault. But you can control it. These government agencies should control it, and it should come back to Main Street. But we don't see that. We see these big time gurus like Amazon, Jeff Bezos, worth $150 billion. This guy alone could stimulate the economy. This guy alone can buy mansions throughout the world, helicopters, and what have you, right? But guess what? They have a way to not have to pay those taxes. They have a way to harbor themselves from this chaos. So as the chaos unfolds, you're going to see home prices go down. And what happened these last 10 years was basically just a band-aid, because it hasn't really fixed itself. You might have had a loan modification. That's why it's important for you to call us. But you may have had a loan modification with an adjustable rate. So it went from 2.35% or 2.37%. So your payment went from $1,000 or $900 to $1,200, $1,800 payment. And that's not fair. So it's important for you to call us, 773-847-2200. We do this throughout the whole US. And the loan modifications is the future. It is the key to have an extra $500 in your pocket. You could have anywhere from $50 to $1,000 savings on your home. I've seen people have homes where their payment's $2,700 and their new payment is, $1,500 with taxes and insurance, which is awesome. It's crazy. I love doing this because I love seeing my clients, especially when they're in an older age. I see my clients save so much money, and it's like, I remember one of my clients, Mr. McShane. I always talk about him, but he worked for the county. He was he worked for the county, a cook, and he was a retired firefighter, right? And he just had that job just part-time, just to make that extra income. But what happened? Well, what happened was he lived in a nice area and he had his vacation home, but his primary home wasn't worth, $550,000. It was worth like $400,000. So what could we have done for him? Well, what we did was he qualified for a reduction of the balance, and the balance was basically removed. Okay, now it wasn't removed automatically. They wanted him to make the trial payments. They wanted him to pay on time. So every year that he would pay on time for the 3 years, he was going to save like 50,000. Okay, 50, 50, 50. So in 3 years, he saved 150,000. Now, it could be more or less, right? But that's the idea, guys. The idea is that you're paying a home it's too much money, and you're working, and 80% of your income is going towards that expense, the mortgage, and you need a cushion. I would say maybe around 50% of our clients are not paying the home. They're not paying the home because they have no other way to get that cushion. People call that mattress money, money that is tucked away underneath your bed in case of an emergency. Your car breaks down. It's wintertime. Out here in Chicago, we get crazy snow. Your car breaks down. You need to fix your car. It's going to cost you $2,000 to fix your car. But guess what? You got that mattress money because you weren't paying the house. That was upside down, by the way. It was upside down. And, luckily you had that money put away. But what would you do if that foreclosure process was speeding up? And I'm talking about light speed. I'm talking about 3 months from now, you're not paying the house. In 3 months, they start the foreclosure process, right? 4th, 5th month, you're already in court. And is there a way to stop that foreclosure process? We can't guarantee that we're going to stop the foreclosure process, but what we could tell you is that we're going to negotiate new terms for your loan. And through that negotiation, I've seen no foreclosure. And if there was a foreclosure, they stopped the foreclosure. So there is no more foreclosure because by law, they have to help you, and if you have that hardship could be death of a family member, cancer. I had a lady that was spending thousands on the right food, all natural food, organic food, just to keep up with that lifestyle, so that way she could survive that cancer. And she actually She actually beat the cancer. I bumped into her at a restaurant with her husband. She was so happy. And we saved her $400 a month through Wells Fargo, which Wells Fargo, by the way, is a very difficult bank to help people. But we could get it done. And that's why I would encourage you to call 773-847-2200 or 844-426-7457. Now, I like what I do because I like seeing people that are older able to retire. And I talked to my client, Mr. McShane. He's in Florida, with his wife, and good for you, good for you. You're able to travel. You're able to spend that $1,000 that you're getting in your pocket every month. And I've seen it happen with family and friends, and it's awesome. I love it. I love the fact that there is hope. It's kind of like a dark tunnel. You see the light, but you got to go through that darkness to go into the light. And you're stepping into an uncomfortable situation. I call it a terror barrier. It's like jumping out of a plane. You've never done it before. You've never tried. And that's the issue. So whether it be loan modification, loan assumptions, deed in lieu, and that type of situation, you're going to find that at the office because we're experts at what we do. Some of the people that work there have approved thousands of cases, getting cases approved right away. And, it just depends what lender you have. It depends who's the investor, and in 2009, Countrywide was one of the big ones where it was like they kept lending. And they were selling these packages on the secondary market. They were rating them AAA, meaning that they were top-notch investments. So people like out of the country they were buying into these packages saying, oh my God, like these are good investments. But then when the economy tanked, it turned out that they weren't rated AAA. They were like triple F, like bad loans. But what makes them bad is the economy. It's not us. It's the way that the economy works and how we're related to the economy. Those gas prices, we're related to those gas prices. Those interest rates, we're related to those interest rates. And as interest rates go up, then guess what? Our salaries need to go up. Our income needs to go up. But no, they don't raise the standard of living. They raise everything else, but they don't raise the standard of living. And they expect you to go to school, right? And to get a trade and pay thousands, hundreds of thousands of dollars to get certified, to get that degree, right? And then that job is phased out because of technology. And that's why I say technology is going to be the key to this mess. Technology could be our downfall and it could be our way out. It's kind of like what I said about the tunnel. Let's just say Bitcoin. You would have bought $1,000 of Bitcoin when it first came out. You would have been a multimillionaire. But people didn't know about Bitcoin. People didn't know about digital currency. And now it's worth $6,500 per Bitcoin. And, I haven't checked today, but it's anywhere from $6,000 to $6,500. So is Bitcoin safe? In my opinion, I'm not a financial advisor, but in my opinion, I believe that it's the future. And as these banks get scared because greed is going to end up killing them, because of the greed, they're going to say, oh my God, I want a piece of the action. And then they're going to start dumping all their money into the digital space, into cryptocurrencies. And as they dump their money in, then you're going to see everything else fail. And you're going to see the dollar diminish. The dollar's no longer going to exist. They're going to come up with a new currency. And that's what they do. They're like lawyers. They convene these meetings. They go in their meetings with all the banks and the CEOs of all the banks throughout the world. So they go in these meetings and then they say, we need to figure out a solution for the people because the people are in Washington right now creating havoc and we need to fix this. We don't want these people to revolt against us, the government, right? So then the government says, we got to come up with this solution. And it might be right away. They might say, okay, we came up with the solution, guys. We have the solution. We're coming up with our own currency, with a digital coin, with our own coin. Or, maybe they use Bitcoin. And then they tell everybody, hey, guess what? We know that the economy's bad. We know that there's no food on the table. We know that the grocery stores are out of food. We came up with the solution. And they could do this right away. Or they could say, hey, guess what? We know that the economy's in crisis. We're going to start pumping out thousands of dollars. Look out for a check in the mail, right? So you look in the mailbox and then you get that check. I wish I got one right now, right? But you look in the mailbox, you get the check. And that's why I said loan modifications is the way out of it, because it might, let's just say it might be a temporary Band-Aid, right? But let's just say it's a temporary Band-Aid leading up to the crisis. And if you're going to save $400, $1,000 a month, any type of savings is a savings, right? And that's why it's important for you to call. And, I know that this video is long, but I love doing the video. And I just love the fact that I'm able to help people. I was discouraged in the beginning, and this was over 7 years ago, but I haven't looked back ever since, guys. And let's just give an example. Hurricane Harvey, remember that? Houston, Texas. We had people calling us from Houston that needed help because they didn't know whether to leave the home or stay in the home and fix it. Some people didn't get that insurance payout, or if they did, they had to wait for it. So yes, there is help for Hurricane Harvey victims. And I believe there's another hurricane hitting the East Coast as we speak. But these are the type of situations that people need to find out about, because there is help out there for you. There is help out there for you. So look, guys, I'm going to have to let you guys go. I would encourage you to call the Loan Modification Clinic, and I'll be bringing you another report on the economy as this thing unfolds. And like I said, it's like a tunnel. We got to go through the darkness before we get to the light, and it's not going to be pretty. We need to weather the storm. But I will say this, that if we get through this as a country, as a people, as a nation, if we get through this, we're going to be all right at the other end. We're going to be okay. We have to just go through this, because we're going to have, everything's going to be a lot different. And, I know you guys might have seen the Jetsons and flying cars and stuff like that. But hey, guess what? When Henry Ford came up with the Model T with the car, everyone thought he was crazy. Everyone's like, how are you going to have this car? They were so used to riding on horses that they didn't think that there was any other way. But guess what? There is another way. But we just need to adapt as a society. And, that's why I say we're going to be so busy. And it is the future, because rates cannot be going up when salaries are not going up. I think rates are going to continue to go down. Regardless if the Federal Reserve increases rates, it's not going to help the country. It's going to ruin us. And for all you know, maybe it's a planned attempt to get us on digital currency. Maybe this whole thing is all planned out for us to fail, to weather the storm, to go through the tunnel, and to get to where we need to get to, because they know that the system is basically corroding itself from the inside. So this is Ross Garcia. Have a good one, and God bless. And I will be back with another report soon. Thank you.